The markets have seen a correction and the altcoins are back to ground level. And the question is, what's in the pipeline for 2025? Are we going to see that actual bull market? That's what we're discussing in this video for you on your journey towards financial freedom. Let's get started.
Hey, as you know, I'm a huge football fan and our sponsor OKX is currently running a promotion with Manchester City. If you create a new account and you deposit €1,000 and you keep it on there for 7 days, you get one of those shirts for free at your home. And on top of that, you might be able to win a 2-person VIP all-paid experience to go to Manchester City, Chelsea. Make sure to get that account and maybe we'll see each other at the Manchester City game.
In December, we had the negativity surrounding USDT and Mica in the fact that the markets were expecting altcoins to crash because USDT was not available in Europe. Now it's after the 1st of January and USDT is just available, but we're going into the next chapter of potential fear, which I'll discuss in a little bit. But as we can see on the chart here for USDT, the question was whether we are going to see a case that the entire market cap of USDT is just going to vanish away. And I've just put it up on the screen. You can see that the market cap has only seen a drop off for around 5 billion. And when the total market cap is 143 billion, currently 137.5, then that's just a very small sell-off based on that news event, and it didn't really have any impact. And most of the exchanges are still having USDT available for all their clients. So a drop-off of 3 to 4% took place, but then the markets, once they have negativity, it's going into the next stage of negativity, which we have been seeing this week. And that has a lot of common sense when it comes to the yields and the macroeconomics. So during the past week, we have had a period where Trump has been starting to say that the interest rates are far too high. And that is quite similar to what he said in 2016 or January 2017, where he said that the strength of the dollar was too high or the dollar was too high. And that's why this chart is very interesting. The dollar is too strong was something he mentioned in January 2017. And after he came into the office, the dollar has dropped from 104 all the way towards 92. And we know what happened during that period of, Trump being in the office and what happened to crypto. So all in all, we need to have a weaker dollar and we need to have lower interest rates through which we're going to see a likely case of QE, and that will be resulting into upward strength on the altcoin markets. And Trump has been saying this, and you would expect that this would be having a positive impact into the markets. But unfortunately, we have seen that also during this week, we have the unemployment data which came out. And as you can see, the first data point was the job openings. The expectations were 7.73 million, and it was way more positive than expected, 8.1 million job openings. And as a result of that, and additionally actually the PMI data, as we can see here, which was also more positive than expected. So that combination has resulted into a case that the yields have continued to go up. As we can see here, the 10-year yield has been having an upwards movement since 17th of September 2024, where we actually started to do the rate cuts from the Fed that marked the low on the government bonds. And since then, they have been going up by more than 30% and are actually approaching almost 5% on the 10-year yield, which is almost a new high. And that is not good for risk on assets. And that is what you want to see change here. Similarly towards the dollar currency index, which is currently on the highest point since October of 2022. So that is the key triggers that we're looking at when we look at the markets in order to have strength on the altcoin markets, that we can't have a strong dollar, because if we have a strong dollar, then the emerging markets are going to lose momentum as well. and everything outside of the dollar will start to lose value. So if we know that this information is important to look at, then there are a few important factors that we need to look at going forward in the coming months, which is labor markets. During this week, we have multiple labor market data, but on a monthly basis, we'll be seeing that. And the Fed has been making a framework for the upcoming year in which they want to see the unemployment not go outside of certain boundaries. Once it gets there, in a negative way, that's going to be the trigger where the yields are going to start to fall. Secondly, we also have seen a very strong hawkish year in 2022. And if that it doesn't have any impact on the economy, it's a miracle. So it's very likely that we will see an impact on the economy. And if that happens, then the GDP and all the economic growth is going to slow down. And that's also a trigger for the dollar to become weaker and for the yields to go down. And finally, if Trump is really going to follow through with what he is saying, then after he comes into the office later this month, that's going to result into a weaker dollar and lower interest rate. So there are a few interesting factors to take into account. And if those are going to be market movers, then we can also say that we're currently on a crucial point where the altcoins are still very low valued and the altcoins are still ready to have that run. It's just a matter of being patient. And that's why I've brought up a few charts, in which the first one is the chart that we see here with ETH against Bitcoin versus the 10-year yield. And as you can see, we actually had this low in September of 2024, where initially Ethereum started to make some movements, a very positive way. But after that, the yields continue to have it upwards run. And I think that current season shows that the correlation between the yields and between Ethereum versus Bitcoin is close to 1. There are seasons that it doesn't have any impact, but at this point, I think that the correlation has become stronger. And you can see that the 10-year yield has rallied upwards where ETH versus Bitcoin went down. And since the period where the yields have seen a slight correction, that was the moment where ETH versus Bitcoin started to make its upwards movement. But as you can see, again, we have had fear, or we had a period prior to Trump getting into the office where the yields continue to show its rally and has been making those new highs. That has again signaled weakness on ETH versus Bitcoin. So what we need to see is that those yields are going to fall and that ETH versus Bitcoin is going to hold substantial levels here. And if that is the case, then it's very likely that we're going to have that upwards run taking place on the altcoin markets that we all are looking for. And especially if you're looking at the total tree chart, which is everything excluding Bitcoin and Ether, it shows that we're currently just consolidating and that we are having a very neutral consolidated period before we're going to have a new upwards run. We have been testing this all-time high. We are just having a normal consolidation, just like we have been seeing here, before we're going to make the next leg up. And then when we're looking at specific altcoins, we can see that overall we're just in an accumulation period. We can see that optimism has been in this range since June 2024. And that shows how boring the market actually is at this point and how much more of upside there is still yet to come. Nothing really moved. We have seen an initial move after Trump got elected, which slammed dunk down based on the USDT. And then we can also see that on the Bitcoin pair, we are currently at cycle lows for most of the altcoins, which signals that there is still a lot more to come when it comes to the upside on all those coins. And when we talk about upside, we can see coins that have been moving and that actually show how much of an upside that is yet to be gained for a lot of altcoins. One of the examples is our friends, the AI agents, in this case, Virtual's protocol, which did a 100x or so in the past 3 months. And then it's currently being discussed all over social media as the CEO of NVIDIA has been talking about AI agents. And yes, it's going to be a great topic. But when you look at Virtuals, it's very comparable to XRP's run, that if you want to get into something like this and it has been going vertical, you need to zoom out and take the higher time frame support levels to take yourself into a position. And in this case, I would be looking at a standard correction of around 40% to at least have a bounce play to be going for in terms of day trading. And if you want to be looking at investing or swing trading, after such a run, I would wait for a standard 80% correction to get back into that position. So all in all, I think the conclusion is that the markets are back towards the levels that they used to be for the past 6 months, and nothing really changed, which means that in terms of your strategy and in terms of my strategy, nothing really changed. So I'm currently holding, and being patient is going to be rewarded throughout this entire year. Thank you very much for watching to this update. Next Sunday, we're going to talk about my altcoin portfolio. Make sure to subscribe, and I'll see you again on Sunday. Ciao.